We are live. I hope I can be heard on the phone. I hope I'm not too loud either. Because, Anyway, let's run it. I'm back here again with another video, another very extremely fire, salsified, finna drop some nuggets, finna drop some gems, finna drop some, man, this car finna go off. This car really finna go hard. Well, actually, I'm gonna say this video. This one is just a continuation of like all my basic videos and stuff like that. Hope not into that. I guess I'm not. All right, so I'm gonna go ahead and run it. Let me just start by saying this is a video. This is Candlesticks analytics, breaking down candlesticks. I'm actually going to show probably like a couple of patterns that you can show up with these that you can use with these candlesticks. First thing I'm gonna say that I kind of just really remembered that I just remember for myself today, that these patterns should be used on 4-hour time frames and like daily time frames. You can use them on 15 minutes and 1 hour. They'll work sometimes, but for the most part, it'll be like a significant move if you use the patterns on the actual, on the actual high time frame. So let me go ahead and start now. So let's say you trade. Matter of fact, I'm gonna show a quick example. I think I should do this now, just to keep things simple, so people can understand. Come on. All right, so I'm gonna go here. I'm gonna go to a stock chart real quick because a lot of people see stocks first. Like a lot of people don't even know what Forex is. So let me just go to actual stock. This is the Apple Stock Index line chart. So if you look at an Apple stock, this is how it would look. If you look at an Apple stock on a 4-hour, this has been Apple since like way back in March, and you see we've been going up this whole time. That is a line chart, or sometimes you might see it like this. But this candlestick chart is the exact same thing. All it is just that the candles, they tell a little more detailed information than a regular chart. So now, boom, back to this. So the candles, let's say this is right here is a bearish candle. This means that price is going down. So the price will start right here at the top of this, at this entry point right here. This will be the entry point for a bearish candle. And up top, this is the highest point. This is just saying that this is the highest that price moved in the time frame, being a daily time frame, 4 hour, 1 minute, or whatever. So you can say that price moved here. It came up to this highest point, and then it just started working its way down. So now down here, this gray line, which will be a wick, this is the lowest point of where price went in that hour. So assume this is a daily time frame. This is a weekly time frame actually up here. So you're saying that the week started up here, and then it probably went up for a little bit. So we had some good pressure throughout the week, and then for the rest of the week we pretty much just fell. The lowest we came in the week was all the way down here, but we didn't finish off the week at that price. We finished off the week right here at this close. So we started up here. We made like a couple of moves. The move's not going to be exact. Sometimes it'll go down first. Like you might see situations where it'll go down first. It'll come all the way back up here and then come back all the way down and then come back to the middle and then eventually close right here. But that's just the order of how the candle is supposed to go. Start up here, go down, so on and so forth. Now, let's say the next candle is bullish. Bullish means that we're going up. This is an up candle. Price will start down here, especially if we just came from a bearish candle, like 9 out of 10, or really 10 out of 10, we will start from down here, exactly where this price left off, because it has to go from up here to down here, all the way to up here. And the same thing with a bearish candle is the same thing for a bullish candle. This is the lowest point, saying that when price started, price probably came, I'd say like all the way down here. Maybe, you know, assume that it lined up with this candle. And then it took off all the way to the upside. And this is the highest that it went, but it didn't close at that price. Like, that's not the finishing price. That's just the highest that it went. And then it came back and it actually closed right here on that price. So those are like basic candles. Sometimes not all candles are going to be this size. As you trade, you'll see some candles, you'll find them like this. Maybe they'll have a short wick. And then you'll probably see like another bullish candle next to it or so. Or even the same thing for a bearish candle. This candle, it might seem like a very big candle. Sometimes you'll see some bearish candles like this that go down very aggressively. This looks like a very aggressive candle, and it will go down very aggressively, come down all the way down here, but not close, and it'll come back up. Put that down here. Or some scenarios, let's say for this, let's say price was going down. I don't have my arrows right now. Let's say, assume that price is making its way down. It's sliding down, sliding down, sliding down. Then it came right here and it made a very big down move. And this is the lowest. And this is the lowest that it went. It closed right here. So assume that this candle, it'll probably just like, it probably didn't go anywhere at all. Just assume that this candle did this and it didn't even push up. Just imagine that, like, so this is telling me that, because you have to understand the candles so you can put two and two together. The candles tell the story. So if you start up here, price went all the way down, its lowest, then it came back. This tells me that price tried to move up. It couldn't really move up at all. It actually took a very hard down move. I mean, it closed bullish. It closed as a bullish candle. But for this part, this actually tells me that price is probably starting slowing down. I'm gonna go over examples and I'm gonna show how these candlesticks actually are used. I said I was gonna make this a long video. I said I was gonna make this a short video. I know I'm not gonna make a short video. Let me scroll up. Those are like the basic actual candles. Now up here, we're gonna go over dojis. Dojis, like, don't get lost. Dojis are pretty much the exact same as candles. You might see this doji over here. You see price open. Price probably moved up all the way up here, and then came all the way down here, and then closed right here. These are called indecision candles. This is saying that basically nobody won. Nobody won pretty much. Like the bears and the bulls, or the buyers and the sellers, they pretty much came to a standoff to where no one moved price at all. So price just pretty much, like, it moved probably within that time frame, but it never stayed closed, or it never just closed above or below. So you can't tell if that's like pretty much bullish or if it's bearish. And then this one, this is also, I think this would be more of a bullish reversal type of doji that you'll probably see. You'll probably see price come in, price will shoot all the way up, but the bears will come back and turn price all the way down, and then pretty much close it right here. So if you're going up the whole time, you're making higher highs, higher lows, and higher highs, and then you seeing this type of candle, 9 times out of 10, or maybe like 7 times out of 10, you might get a reversal, and then prices start to fall down. This candle is just saying that it started down here. The bulls brought it up. The bears brought it right back down. But the bears also, they didn't bring it down here either. Like, they didn't have enough strength to bring it down. So, and then this is the same thing for, I guess, if you were in sales, this would be like a reversal. Price will be going down, making lower lows, lower highs, lower lows, lower highs. You'll see this candle where the bears, they pretty much like push price down all the way, but the bulls came right back and they took it right back up. But the bulls didn't have enough strength to push it up, so they pretty much just closed right here to indecision, to where nobody won, nobody lost. But at the same time, these are good for reversals. That's why you have to understand. You have to really break down and understand the candles. And once you put them in like real chart form, you'll understand exactly what I'm trying to get at or what I'm trying to say. Let me bring this up. This is another. These are like some. Oh wait, hold on, it didn't show. There we go. All right, so these are some of like the 8 most common patterns that you'll probably see. These are candlestick patterns. I'm gonna do another video that goes over like double tops and double bottoms. But this is just some of the candlestick patterns that you'll actually see. See what I mean? Like this is like a down candle. This is a bearish candle. This next one is the bearish candle. This is kind of like the doji that I was showing at first. This is just saying that price shot all the way down. The bears brought price all the way down. The bulls brought it back up. And it's really bullish because you can see that it closed as a bullish candle. The way it closes are big hints too. Now, inverted hammer. There will be times where you'll see bearish movement, bearish movement, bearish movement. And then in this situation, you'll probably see like gaps because price, it'll close here, but then it'll jump all the way down here. Price will make its up move like it wants to come up, but it can't make it up at all. So it just closes as a bullish candle. This could be, sometimes it's like a signal. For most times, it's pretty much like a fake out. We do have a couple of fake out candles. That would be a fake out candle. And then this dragonfly doji, this pretty much works the exact same as a hammer, except that look at the closes. This closed bullish, so this tells me that we're probably like immediately about to go bullish, like on the next candle. This one, it closed as an indecision. So you might get like a nice up move. You might get like a little bit more down moves before you get an up move. It just depends. Depends on like the chart and what's going on at the time. This bullish engulfing, pretty much like one of the favorites of, like this is a good, most common reversal that you'll see. You'll see price making its way down. This big engulfing, they say a rule for engulfing that price should come back to at least 75% of the previous candle. This candle, you see it covered it, and it covered like the whole candle pretty much. So once you see like a big engulfing pattern like that, a lot of people, like the textbook, a lot of experts, they say that you want to enter on the top of this candle and you want to have your stop loss down here at the bottom of this candle. Mind you, you're still playing off of like the 4 hour and the daily time frame. If you're off the 4 hour time frame, I recommend that you just do it as textbook, especially if you're new. Just like start from up here, put your stop loss way down here. You might have like a 40 pip stop or a 30 pip stop. It just depends on like how big the candle is. The next candle should 9 times out of 10 be bullish again, and then it should erase this whole little bearish move. Same thing for the bearish engulfing. And the shooting star hanging man, they pretty much the exact same thing as the hammer, just in reversal form. Just for this hammer, you'll probably see as a reversing buy. For this inverted hammer, you'll see it like a fake out sell. This dragonfly, I would say that could go either way. That can be as a reversal. That can be a continuation. This engulfing, definitely a reversal. Guaranteed reversal. That's why I'm saying they're always like people's favorites. So those are like some real common ones that pretty much everybody use. I'm gonna put it over on the side. Now, what I'm about to do, I need to go to the chart to see these actual candles live, especially those reversal patterns. I definitely want to see those. So this is GBP USD on the 4 hour. This is current time. So you see back here, this is June. And you see we're in the downtrend from, I'm gonna say from this little point. This is where we broke structure. So from this whole little move and then this move down, oh, it's ugly, right here. From here to this move down, we're in the downtrend. Now, one thing I should do before I start on this, let me go to another chart. Because I was about to say, one thing I need to do You do have to do these candlesticks on like 4 hours and daily time frames, but you have to do them at key support and resistance levels to show like good signs of reversals. So I'm just gonna mark some off real quick. I'm gonna do another video on that too. I don't know if I said it already. Support and resistance lines. Let's see. So a good way to draw these lines. Shout out to Abel Melendez. He really showed me how to like really draw these. He don't even know me. I had just been watching them from all his YouTube videos. But okay, so you start on the higher time frame. For these examples, I'm just start on the daily and the 4 hours. So you put your support and resistance lines where you see a lot of touches. So you see like up here, you got 1, 2, 3, 4 touches on the daily. So that's a very strong line. I don't think you do zones, but I'm gonna just do lines just to keep things simple. Right here, I would say right here, wherever you see like a nice amount of bounces, right here, and I'm gonna drop down to the 4 hour. I'm gonna do one like right here, because you can see this is a very nice set of structure. Where we go up, you see we bounce, we take off to this next structure. We come down here, we bounce, and then we make it like a little pullback, and then we fall through again. But even when we fall through again, we came back and tested that area. Oh yeah, that's support and resistance video about to go off. That one gonna be cold. Okay, so these are some nice support and resistance lines. So I'm gonna go back to candlesticks, and I'm gonna do this. So now you see how everything like lines up. You see exactly where everything bounces and where everything comes back to. But for this example, I'm just going over like actual patterns. Finding these patterns are gonna be hard, I'm not even gonna lie. But I'm gonna just make it simple, actually. Up, boom, I already found the pattern right there. Right here. But so to actually explain the candle, like you see, this is where price started up here, and then it worked its way down. The lowest point was all the way down here at the bottom of that wick. Rectangle. This one right here. All right, so you see the lowest of that candle was this bottom of this wick right here, and the highest, it only went up. So this tells me that price only went up just a little bit, and then it continued to fall again. So we pop out the ruler, pop it up the top. You see the top of that wick was just about, remember, this is JBY pair. So that was just about 9 pips, 9.6 pips. And so price went up by 9.6 pips, but it fell for 178 pips, which is pretty nice. And actually, like if you want to be technical, it fell for 225 pips, but it closed for 170. And the next candle, you see exactly where the next candle starts on this next bearish candle. So this is the 4 hour chart. So this candle is 4 hours. This candle is 4 hours. So that's 8 hours of very like aggressive selling. And within that whole sale, if you measure it from when price started all the way to, from when price started all the way down to when price like ended, this was a 529 pip move. Like this was from 4 in the morning to 8. So from 4, this is a 4 o'clock candle, and this is an 8 o'clock candle. So that means actually from 4 to like 12, they pushed price for about 511 pips. And like if you just would have caught that move, then that definitely would have been like a sweet little move. Now, could we have caught that move? I mean, yeah, you could have caught that move. I'm not even gonna sugarcoat it. Like you definitely caught that move. And this one right here, very obvious. You got this down move. Let me hide all this stuff. You got this down move right here, and then you got this very big bearish candle that's next to it, and then you see this very big wick that comes up, and then it comes back down. Now, like remember I said in some situations, like you'll see it come up, but then you see it continue right back down too. But for the most part, like in this situation, it came up. So let's just see. Like you see, it came down. This candle, it came down for like 180 pips. But when it came down, look where it started. It came down to the bottom right here. It started right here on the open, and price made its way all the way up. So at one point in time, this was a very big, like a very big bullish candle, but it never closed all the way up here. It came back and it closed all the way down here. So that move, like it just depends on how you really saw it. That's why like a lot of actual like day traders, they try to have like take profit zones and where they want price to actually go. Because for like an actual day trader, they probably would have got in this 8 in the morning. So assume that you've seen a signal that said buy GBP JPY at 8, and price moves up. Like price moves up all the way to like 180 pips. But you don't close out because you think it'll keep going up. But it actually turns around. Now, I mean, you still ended up in profit. Well, like you still ended up 20 pips in profit, but you just have to understand like where you're going pretty much. Another way you can really use these candlestick patterns are really good. Matter of fact, speaking of which, I think this is inverted hammer. I think this is an inverted hammer. Yes, that's it. It went down. We came right back up. Came down, came right back up. Let's say I throw a line on here. Let's just assume that this is like a support and resistance line on a smaller time frame. Purple. Okay, so assume this is a support and resistance line on a small time frame, which it kind of is, because if you drag it back, you remember you look left to get right. You see this line kind of sort of did act as a support, act as a sign of support. So it bounced off of here a couple of times, or bounced off the area a couple of times, and then it finally turned around, came back down past that line, came back and retested it a couple of times. This is your first test. Assume that you got in on your second test, or you got in somewhere like in the area, and then you just pretty much like stayed in the sale, or you just waited until you seen fit. Some people like to like catch exactly the moves for the morning. Like if you just stayed in for those like 4 times, if you would have stayed in for those 12 hours, which would have been a nice little hold, like you would have had to hold it for a little minute. But even if you would have held it for that long, and you understand how these reversal patterns how these reversals happen on support and resistance, then you can just take it down like that's almost 170 pips just because you've seen the reversal. Where's the other one that I seen? This one right here. It's kind of not really. It kind of is like reversal. All candlesticks don't have to actually be perfect. Like I think this is not a hammer. I'm trying to think before I go to it. This is a shooting star. It's a shooting star. It's a shooting star. Because you see we're bullish the whole time. And then we had a very big bull run up, but we came right back down and we closed as a bearish candle. Now in this situation, we didn't close as a bearish candle. This is a bearish move, and then we had a big wick up. So I'm looking for a bearish move, a big wick up, a bearish move, and a big wick up, which would kind of be, it would kind of be like somewhere in this area. Like you have to think about how the actual structure is moving. Like we're going up. So this is a big up move. This is just like one small little candle that came in the midst of that move. So big up move. We came down right here. I'm gonna just mark this off. This whole little section right here. Come on. Boom. That's cool enough. All right, so this whole section right here, we got a bull move up, we got another bull move up, we got a nice push down. That move, big move up, nice push down. That's hanging man. So that's what that is. It was a hanging man, and then it followed with a shooting star. We got this hanging man, we got up move, we came down aggressively, and then we came up real quick. And then we just turned around and we just walked on off. We walked on off. This is a cool one right here. This is a very, very, very aggressive line. You see that this line that actually came back and tested this daily support line, and then it came back up. Engulfing. I'm looking for a good example of an engulfing. This would be a cool example. Nah. We want a cool example. I need to look for some that's around like key support and resistance areas, so that way it makes sense. Okay, this is one that makes sense. These aqua lines, I drew these off of the 4 hour. So look at this move. This is a move. It doesn't have to be exactly perfect, but this is an engulfing pattern. This is a bearish engulfing right here. You see how that very big bearish candle, it pretty much like took over all of that small little bullish candle. So they say, remember earlier I was saying that you want to get in at like the bottom of the candle, and then you want to put your stop loss all the way to the top for new players. And that's why I was saying like you pretty much like want to keep it simple like that until you actually like get good in the game. You have your stop loss up here, back at that little resistance level. Now see, this is like 65 pips. You just got to be like cool with like how much you're risking. If you cool with risking that, then I mean like take it. But at the same time, like still watch structure and still watch where everything's going. Because you could have took that, see how it came right back. But if you just would have took profit at 140 pips, like you still good. You risk 65 to get 140. Like at the end of the day, you still won. And assuming that even if you didn't go all the way over here, like it still would have gave you another chance to hit that 140 down here, because that is another pattern. I think this is a hammer. Yeah, this is a hammer. This look more like a nail. See the way it came, it drove its way down, it drove all the way down again, and then price came up. These are actual like candlesticks that I like when I trade personally, because I'm always looking for that upthrust move. I'm kind of risky. I actually need to start. I said this myself when I was making these videos. Like, bro, these basics videos can actually like really get people paid because they're so simple to understand, and you don't have to overcomplicate it or anything. You still have to watch out for smart money and all of that, but for the most part, these basics, like, they're real easy. So look at this engulfing. Me, I would have played pattern off of pattern. So right here, you got this hammer formation. Right here, you got this bullish engulfing because this candle overtook that whole candle. For retail, or I'm not gonna say retail, for new people, for new traders, remember the rule: you get in at the top, which is the close of that bullish candle. You put your stop loss at the low of that candle. So this is about 43 pips that you're risking. And let's say you want to get double that back. You want to get back 86. Oh, excuse me. 86 pips. And if you would have took it up, because remember, you took it at a 4-hour support level, and assume that this is TP1, this is TP2, this is TP3, because those are structural levels. What you should do at structural levels. I already got the box. This whole move was about 215 pips. So you risked 40. Remember, you risked 43 down here. You see, it never came back to your area. It never came back down here at all. That's why on the 4-hour line, I'm really gonna start killing this 4-hour chart. So you start making your way up. You wanted like 80 pips. This would have been TP1. So you see, you went for more than 80. And then with this very big candle, this is the 8 in the morning candle. Like, I definitely would have stayed in the trade. And then I would hop out like around 11, or when it hit this daily level, 113 pips. Like, off of using candles. Me personally, it's because this candle is telling me that price wanted to go down, but the sellers, they ran out of pressure. Like, they just got tired. They just gave up, and then price came right back up. So now that price came right back up, right near this level, and you got this bullish engulfing, and then you got this next bullish engulfing. Even if you miss this one, you can still catch this one, because remember, this is a 4-hour chart. Like, it's gonna ride for a little minute. That would actually be a Dragonfly Doji, if you want to be technical, because it did close as a Doji. I'm gonna look for a Gravestone Doji, and then I'm done, because I did not want to make this video long. I don't really care. I mean, like, we need this value. Boom. Yeah, you can say this is a Gravestone Doji. The Dojis, some Dojis, you'll see, like, this is another one down here. Some Dojis, they'll come out. On my chart, I got them gray. Some Dojis, they'll actually come out as like a bullish Doji, or some will come out red as a bearish Doji. Every now and then, on MetaTrader, you might see a green Doji. That's just like actual like indecision. I never really seen it, but I seen it like a couple of times. So like, you look, like, you see it made this big up move, and then it made this Doji, and then it made this big down move. You could have got in on this trade, but honestly, that would have been one of the trades that you just like take a L on. Actually, no, I wouldn't have gotten on that trade, because it's not near no support and resistance. This one, this is a trade. This is where it started looking kind of funny, because like, you can still play it, but you just have to like really be careful on how you play it. Let's assume that you got in right here. No, you actually got in right here on the close of that very big engulfing candle, and you had your stop loss up here. And honestly, you actually would have made it. Depends on how far you went. This stop loss was about an 87 pip stop loss. You don't have to do 87 pip stop loss. Like come on now. Now that's why you got to be careful. Like, that's why you have to really like stick with the rule set, because let's say you didn't want an 87 pip stop loss and you brought it in to like 40 pips, and your take profit. So if you had 40 pips, your take profit would have been like 80 pips. That would have been your goal. You would have hit stop loss before you hit take profit, because you didn't follow an actual rule of like the basic actual rule, like keeping your stop loss up here. It is risky, I'm not gonna lie, but at the same time, like, look at the payout. Like, if you just like follow the rules and just wait. If you follow the rules and wait, I mean, you couldn't have done it 2-to-1. That just would have been a complicated trade. Like, that's a trade that actually would have looked good, but like putting the risk to reward on here and doing it live in MetaTrader, two completely different things. Two whole completely different things. But that's pretty much it. Just keep just getting the habit of like drawing your support and resistance lines, which is going to be in this next video. But definitely peep this. I'm actually going to make a copy of this and put it in the link in the description or something, because this is like a very simple, it's just 8 candlestick formations that people trade off of. Boom. That's it. I'm done. Woo! Running through the videos like it's nothing, boy. Running through videos like it's nothing. So, yeah, y'all definitely check that out. Watch it as many times as you need to. Any questions, comments, or concerns, definitely get at me, because I would like to answer our questions, you know. So, yeah, that's about it. Catch y'all next time.